Good morning, folks. This is Manny Magoo, and today is Thursday, November the 12th, approximately 8:50 a.m. I wanted to do a morning recap of what we traded yesterday and what we're possibly looking to get into today. I'm also going to do a review for one of our viewers and students who's done extremely well. His name is Mark, and he wanted me to review UPS for him. And Mark, I'm definitely going to do that for you, so I hope you're going to watch this before the market opens so you have an understanding of where UPS may be going. So let's dive right in. We're going to dive in right now to WORKHORSE, WKHS. As you know, we have been watching this all week, and I am looking for a break of 1919. It's been trying all week, folks. It seems like 1919 seems like the wall of China. Every time it breaks it by a little, it usually pulls back, finds support at 19, breaks it a little bit, and then reclaims it again. It's been a chop fest, this 1919 area, which, by the way, was last week's high. Which we had last week's high was an inside candle, but let's take a look at WORKHORSE on a 5-minute chart so you get a better understanding of this. So here we are in the last 3 days. This is Monday. This gray area here is pre-market and aftermarket. Again, this is Tuesday, the black area, and this is pre-market, aftermarket, and this was Wednesday. And as you can see, my line here at 1919 has been it's been tough. We did take the trade on Monday. We made a little money, and it broke 1919 again, which was last week's high. Tried to reclaim it and run, pushed back again. Tuesday it got to 1920 and it pulled back. Yesterday it broke it a little. I did take the trade, thought it was going to run, immediately put my stop at 1919 again. And it got me out, didn't cost me a penny, which is a good thing. Try to reclaim again. What I wanted to really see is some type of consolidation. I was actually getting a little excited here when I saw that 1919 was holding in this area. As you can see, it did consolidate, and then it put in this beautiful big green candle at 1:45 p.m. Shortly thereafter, though, it just came back down again, came back to 1919, held it for a little while, and broke this 1919 again. Again, folks, I'm going to keep my eye on this today. If it does break this 1919 area, I will give it another shot, knowing that 1919, if it does break, it will be support. But anyhow, that's WORKHORSE. It's been playing like this. It's been pretty frustrating because I like to see this run, but again, patience pays. Moving on to the next stock that we did trade yesterday, it was MODERNA, MRNA. Okay, now I want to show you something. If you go back, these are monthly candles. I love playing the weekly breaks, and I extremely love playing the monthly breaks. Monthly candles hold a lot more weight than weekly candles. There are 30 days of data. Okay, so on a monthly candle, our high was 81.37, which was October's high. Our weekly high for last week was 74.16. I'm going to move to a weekly chart. As you can see there, that was the weekly candle of 11.12, 74.16. And I'm going to show you a smaller term time frame and exactly what had happened. So I'm going to move. This is Monday. We did not take the trade. I do not trade pre-market, but it did break in pre-market. For those who took this trade on MODERNA, God bless you. On Monday, you really made a lot of money. As you can see, MODERNA reached the monthly high in pre-market before it pulled back. So you have to really pay attention to these levels, folks, because there's a tremendous amount of support and resistance around them. As you can see what happens here. So this is Tuesday. Look at MODERNA. It basically came back down, and look what happened, folks. What is that? Okay, that becomes support. That was the weekly high. When price action breaks the weekly high of resistance, the resistance then becomes support. And that's exactly what happened to Moderna. Came back, found the support on the weekly high, and pushed up again. Now, yesterday, I was watching Moderna, and we took this trade at 81.37, the break of 81.37, okay? It broke the monthly high, and it came back, touched the support on the monthly high. We did not get out of this trade, okay? I wanted to give it a little bit of room. I gave it a little bit of patience to see if it reclaimed, and it reclaimed it immediately, and it pushed up. I'm still holding Moderna. I don't have a large position in it, what I like to do, I'm a little conservative. I like to start a position on a break and see if it works. If it is working, sometimes I usually like to add on. Right now, Moderna is trading in pre-market at $85. We got in at 81.37. So far, so good. We are looking very good. We'll see how it works out today. Folks, if this does break the monthly high of 81.37, chances are I will be out of this trade. So I'm hoping that doesn't happen. But again, you never know what thing's going to happen. But Moderna, we did take Moderna yesterday. Now, another trade that we had our eye on was Apple. I mentioned it yesterday in the review, and I basically said that if Apple breaks the weekly high, this is yesterday's chart, I'm going to take the trade at 119.20. Well, guess what? It never broke the weekly high. It broke it in after hours, and it's breaking it now in pre-market. Okay, so I'm going to keep an eye on Apple. However, as you can see, folks, look what happened yesterday. It gets up to almost that area, and it pulls back. That just goes to show you that these weekly high and lows are very, very important. You should always have your lines drawn on the weekly high and weekly lows, okay? And you should always have your lines drawn on the monthly highs and monthly lows. Another thing to pay attention to, once you break a weekly high, you have to start looking at your shorter term time frames for the next area of support and resistance. And this is what I teach, okay? So just because it's broken a weekly high doesn't mean that you're just laxed and you're forgetting about the trade, okay? You have to pay attention, and you have to go to a shorter term time frame, whether you're using a daily chart, okay? Whether you're using an hourly chart. And as you can see here, I've identified the next layer of resistance on Apple. The next area of resistance on Apple that I see is this 121.99 area, which is right there. Okay? That's the next area I see as resistance on Apple. But however, in order for Apple to even get there, again, we have to have a clean break of 119.62, which was last week's high. Okay? Now, moving on to Mark's pick, UPS. All right, Mark, let me take you through this. Let me see and show you what I see, and kind of give you my take on it. Okay, UPS has been amazing runner. As you can see here, this is a daily chart on UPS. Now, folks, you see one thing, okay? You see a tremendous amount of consolidation here in this area, in this channel, okay? So when it broke it on 9/26, we had a gap up. And as you can see, what did it do? It pulled back, again, back into this area and channel before it broke it again, making a high of 178.01. Now, as you can see here, for a couple of days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, 12 days, it consolidated in this area, okay? And usually when a stock consolidates, it's either accumulating to go higher and breaking an area of resistance, which this would have been the resistance, 177.15, or it's accumulating to distribute to the downside. Okay? Distribution means that institutions, instead of dumping their shares immediately and they want to take some profit, they gradually sell, folks. Okay? Because they want to keep the price stabilized so they can get the best price. And little by little, what they do is they start selling little by little, little by little. Now, we don't know that because what we're seeing is we're seeing it consolidate. Okay? And people think that just because it consolidates, it may just go higher. That's not always the case. You can have consolidation distribution, which means that the institutions are selling little by little, little by little, little by little, and then all of a sudden it starts going lower, okay? So again, over here you see distribution came back. What did it do? Well, it fell back, it gapped down, and guess what it gapped down to? It gapped down to this area of support, okay? So it's very important to read your support and resistance. Now, what did I do? I went to a monthly chart. As you can see, October high is 178.01 mark. The low is 155.25. So right now, this current month, which is November, it's an inside month. What are inside months, folks? It means that the inside month, it wasn't strong enough to break the previous month's high, but it wasn't weak enough to break the previous month's low. So right now, it's in a consolidation phase, kind of figuring out where it's going to go. So that's a monthly chart. Let's go to the weekly chart, okay? Okay, so really pay attention to this. So on 10/26, this is the candle, folks, that dictates and is what's going to happen here, okay? Right now, on the 11/2 week, we had an inside week. I love playing inside breaks, okay? Right now, we're having an inside week, okay? So in order for UPS to break out, it has to, number one, break 168.30, which was last week's high. And then what you have to pay attention to is you have to pay attention to the next area of possible resistance. What's the next area of possible resistance? 171.67. Until it breaks 171.67, folks, it will not march up, okay? It will not go anywhere because this candle here, everything's inside this candle, okay? I hope you understand that. So let's go to a daily chart on it. And here we are. And again, what did it do? Yesterday, it got to 168.22. 168.30 is last week's high. Did it break it? No. Okay? So, I love this chart. It looks really good. I'm going to have my eye on this today, UPS. If UPS breaks this 168.30 area, chances are I'm going to be taking this trade. So, Mark, thank you very much for pointing this out. I really do like it. And let's just take a look quickly at the pre-market. Oh, boy. Okay. So it really gapped down here in pre-market, 160. Again, I don't trade pre-market, folks. So to be honest with you, I don't really pay much attention to this. What I'm going to do is when the market opens, and usually I don't usually trade the first 10, 15 minutes of the trading day. I give it a little bit of time. I let things settle out. I'm patient. And you have to be patient. That's very, very important, okay? But as of right now, again, Mark, I would not take this trade until it gets above this 168.30 level, okay? Please do not anticipate that it's going to get there. Please do not anticipate any type of move. If it doesn't get there, what do? You sit on your hands and you wait. Okay, so folks, I'm going to get going. I have a lot to do. I'm still charting out some stocks. I will have a new stock pick this Sunday, okay? So I will post it on my watch list. I think it has a lot of promise for future growth. Oh, and a shout out to good old NIO. NIO just keeps on running. Yesterday, another amazing day on NIO. This stock has just been incredible. Again, folks, be careful, okay? We have earnings coming up on NIO, and the earnings are on 11/17. Do not anticipate that it's going to report great earnings just because this chart has gone through the roof, okay? You never know. You always want to protect your investments. We teach how to protect your investments with hedges. We have a private room that we have a lot of traders in, and that room, we teach a lot of this stuff. But if you have any questions, if you have any concerns, please comment on this video, and please email me, hunterchasetrading@gmail.com. I'll be more than happy to help anyone, and I'd appreciate if everyone that's watching these videos subscribes. I greatly appreciate that. That's all I ask you to do. Again, this is free information, and I'm really trying to build the channel, and hopefully everyone likes what I'm doing. Again, happy trading today. Be safe out there, and patience. Please exercise patience. Good luck today, folks.